Ladies and gentlemen, good day and welcome to GREENLAM Industries Limited Q2 FY21 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Saurabh Mittal, Managing Director and Chief Executive Officer, GREENLAM Industries Limited. Thank you, and over to you, Mr. Mittal.
Thank you. Good afternoon, friends. A very warm welcome to all of you. I hope you're all keeping safe and healthy. On the call, I'm joined by Ashok, our CFO, Samarth Agarwal from the finance team, and SGA, our investor relations advisor. The results and presentations are available on the stock exchanges and our company website, and I hope everyone has had a chance to look at it. This quarter, we saw an improvement in revenues on a sequential basis as most of the domestic markets opened up, while certain urban markets were partially open. If you view the entire quarter, like Bombay, Thane, a little bit of Calcutta was shut down. Delhi had certain problems. So if you look at Q2, from our perspective, most markets open, but certain urban centers were still struggling with the virus cases. Most of the international markets were open, besides, again, few markets in Southeast Asia. So the business on the international front has come to near normalcy, as you can see, and which is nearly at a 93% of what we did in Q2 FY20. Domestic business also has pulled up versus Q1 and has come to like a 80-83% normalcy. But we're still below the pre-COVID levels. In last quarter, we did face some challenges on the export front in terms of containers availability versus delay, which also led to certain revenues which could not be recognized in quarter two. And that problem still persists in this quarter as we move ahead. While the revenues were at a 83-84% overall, you probably have seen that we held on very well on the balance sheet front. We managed to reduce the debt which increased in quarter one, and beyond that too, we reduced about 14-15 crores of debt oblique. We had cash on the balance sheet. The debtors days improved to 32, which has been one of the best for us until now. And the costs were well managed in this period. So really, I think the focus on quality of the balance sheet remained, which is aligned to our philosophy. And I think we did fairly well on that front. In terms of the demand situation, currently in the international markets, by and large, demand is back to what we were experiencing last year at the same time. While we don't see growth in the export demand, but with some markets growing, some markets still struggling. On an overall basis, we think international business demand is by and large near a pre-COVID kind of a level. On the domestic front too, there surely is an improvement in the demand, and if there are no other surprises of lockdown, etc., we think H2, we should be able to do reasonably well on the domestic front too. So this is by and large on the domestic. On the domestic front, the residential demand seems to be more robust than the commercial part of the business, and besides the domestic and international demand improving in H2, we think we will gain from the shift from unorganized to the organized players. We also think there will be improvement in the flooring and door business because of the issues of imports and people moving to domestic manufacturing and domestic products. So overall, we think our H2 should be better than H1, and obviously I'll put this with a disclaimer, subject to no surprises and no fresh impactful lockdowns. On the product side, we launched the antivirus product in last quarter, in August actually, and this was backed up with a marketing campaign, and this has been launched in the flagship brand of GREENLAM, very well received in the market, and we really started talking about the health and hygiene, strengths we had with the product. We were offering antibacterial for over 10 years, and in this pandemic, we kind of made more noise about it. We communicated to our customers, and on the same path, we launched antivirus. And now you'll be happy to know that GREENLAM, the flagship brand, comes with triple features of antivirus, antibacterial, and antifungal. And this has been very, very well received in the market. The other feedback or the other update is on the GREENLAM South Limited, which is the plant we wanted to build in Andhra Pradesh. So we are moving ahead with the necessary approvals from the government, the environment clearances and certain other approvals. So the moment we get those approvals, we'll begin to build a plant. So I can't give a date on it right now, but yes, obviously it has got postponed because of the COVID and certain delays, etc. But by and large, once the approvals come in, we'll start constructing the plant. I don't think that's going to happen in this financial year. Probably will move to next financial year. That's on the GREENLAM South plant. The other point, I'm sure you've seen that today we had an announcement of incorporating a company in Russia. So this is to market laminates in the Russian and CIS countries. We're just going to start with one person currently, but we hope to scale this up in the near future. So that's it from a business update, from my side, and I'm sure things will improve in H2 versus what we did in H1. I will now hand over the call to Ashok. Ashok will take you through the financial highlights, post which we'll be happy to answer your questions, queries, and happy to take your suggestions also. So Ashok, over to you.
Thank you, sir. Dear friends, I'll take you through the financial performance. Please note that the financials are not comparable on 6 months basis due to partial shutdown of operation in the quarter 1 due to pandemic. So I'll focus more on the Q2. For Q2 FY21 versus Q2 FY20 on a consolidated basis, net revenue degrew by 17.1% on a YOY basis at 289 crore. However, on quarter basis, the revenue grew by 80%. Gross margin improved by 190 basis points on YOY basis and stood at 48.9%. On quarter basis, gross margin declined by 80 basis points. Gross profit declined by 13.7% on YOY basis and stood at 141.6 crore, whereas this is improved by 78% on quarter basis. EBITDA margin remained flat on YOY basis at 14%. However, on quarterly basis, EBITDA margin improved by 910 basis points. EBITDA declined by 16.6% and stood at 40.5 crore on YOY basis. On quarterly basis, EBITDA there is a huge improvement of around 414%. Net profit for the quarter declined by around 33% to 18.6 crore in this quarter as compared to 27.5 crore in the corresponding quarter last year. Net profit for the last year for the same quarter was higher on account of one-time tax benefit of rupees 9.7 crore under the new tax regime announced by government in September 2019. Moving on to segmental performance, laminate and allied products formed around 89% of our Q2 sales. Laminate revenue degrew by 12.7% to 258.5 crore in this quarter from 296 crore in Q2 last year. However, on quarterly basis, laminate revenue improved by around 77%. Domestic laminate revenue degrew by 18.8% in value terms. However, in the volume terms, the degrowth was lesser and it degrew by around 5.4%. In international revenue, degrew by 6.9% in value, and in volume terms, it degrew by 8.6% for this quarter. EBITDA margin improved by 80 basis points and stood at 16.2% as against 15.4% in quarter 2 last year. EBITDA margin has improved by 770 basis points on quarter-on-quarter basis. Production volume were at 3.24 million sheets and utilization level was at 83%. Sales volume for the quarter stood at 3.23 million sheets, a decline of 7.1%. For quarter-on-quarter basis, laminate volume grew by 87% and production improved by 62%. Our average realization for the quarter was 772 rupees per sheet as against 803 per sheet for the Q2 last year. Moving on to decorative veneer and allied business, which formed around 11% of our Q2 sales. This segment consists of decorative veneer, engineered doors and floors. Total veneer and allied revenue stood at 30.8 crore in this quarter, a degrowth of 42% on YOY basis. In the decorative veneer segment, revenue for this quarter degrew by 50.8% and stood at 14.8 crore on YOY basis. However, sequentially, decorative veneer revenue improved by 136%. Capacity utilization for this quarter stood at 18%. Sales volume were at 0.21 million square meter. Sequential production and sales of decorative veneer improved by 88 and 149% respectively. Average realization stood at 704 per square meter as against 670 rupees per square meter in quarter 2 last year. Moving on to engineered wood flooring, revenue for this quarter degrew by 39% to 9.1 crore. However, on sequentially basis, we improved by 173%. EBITDA loss for this quarter was narrowed down to 0.7 crore from a loss of 1.1 crore last year same quarter. EBITDA loss in quarter 1 FY21 was 1.5 crore. Moving on to engineered doors, revenue for this quarter degrew by 13.6 crore and stood at 7 crore. However, sequentially, revenue improved by 35%. EBITDA loss for this quarter was at 0.8 crore as against 0.9 crore in the Q1 FY21. Capacity utilization for this quarter stood at 29%. Moving on to balance sheet. Net debt for this quarter stood at 249 crore as against 318 in the quarter 1 FY21, resulting a reduction of 69 crore. In comparison to March 20 also, we could able to reduce our debt by 14 crore. Working capital cycle saw improvement from 383 crore in June 20 to 346 crore in September 20 due to improvement in inventory and debtor cycle. However, the same is still elevated due to still higher inventory and a bit lower sales. This is all from our side. I would now like to open the floor for question and answer.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Nehal Shah from ICICI Securities. Please go ahead.
Yeah, thanks for the opportunity. Sir, my question would be on the demand for laminates as far as the market share gains are concerned. So, like last quarter, we were hoping for market share gains across domestic as well as overseas. Are we already seeing that, or do you think that that's still some time away?
So, Nehal, I think on exports in the categories we operate, I think we are gaining market share. And on the domestic too, if you see versus Q1, the volumes have gone up. And the realizations have reduced a bit, which clearly means the 1 millimeter business is still not at what it used to be, while the commodity products we launched, that sale has gone up. And each passing month, we see that the 1 millimeter business is coming back to normalcy, while we are also able to, continue and keep building on the commodity, which is the 0.7 category. So in my view of whatever we see in here, I think we are moving in that direction. And obviously, we can't quantify it so clearly, but I think we are moving in that direction, Nehal.
Right. And sir, on 1 category, do you think the discretionary spends are now coming back?
Yes, I think it is coming back since we track secondary sales of most distributors across the country. And like I was saying earlier, in July, August, or even in Q2, we still had lower sales in markets like Delhi NCR, Bombay, Thane, Bangalore, Calcutta. So these urban markets, which are largely 1 millimeter markets, so there was still pressure on sales. Shops were still shut. Markets were not completely open. But like in September, we saw secondary sales improve. And even October has, it's been quite decent from that point. So answering your question, yes, it is coming back, Nehal.
Yeah. And so my last question, has October started, has the degrowth gone away in October? Because October you'll have a benefit of the festive days of last year.
So yes, we don't have any degrowth in October. Yeah.
Oh, great. Thanks a lot.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and one now. The next question is from the line of Sneha Talreja from Edelweiss. Please go ahead.
Thanks a lot for the opportunity, sir. So a couple of questions from my end. Firstly, you said that, of course, container availability was one issue because of which your export got impacted. Can we quantify the same, just to gauge how much is the normalcy that we have attained?
So you could assume that from a business point, we're nearly at a full normalcy in exports. And the way we recognize revenues of exports when goods sail from the sailing port and not from the date of dispatch. And where our subsidiaries are concerned, we recognize revenues when the goods reach the destination ports. And so because of lack of availability of vessels and container availability and being some delays, I'm not going to be able to put a figure to it, but you could assume that we are nearly at a normal revenue on that front. Yeah. So assuming for the subsidiary sales, what could have been booked, what could have been recognized as revenue in September has moved to October, and there are delays of availability of trucking, and at the ports also. Yeah, so I hope that makes sense. Yeah.
So maybe if the situation was normal, we wouldn't have seen this kind of a 9% sort of a drop. It could have been even 0% is what I wanted to understand.
Yes, you could assume that.
My second question was, of course, you mentioned your domestic realizations are down because your 0.7 sales is picking up versus 1 Could you just give us a mix of the same?
Last year also we discussed this, so you'll have to take this offline with Ashok, please. I can't give you a number on this right now, please.
Sure, I'll just keep that noted and keep speaking to someone, sir, or Ashok, sir, on that.
Yes, please.
Sir, also, the repetition of the first question about the competitive intensity, you are seeing versus smaller players. So, of course, you discussed in brief last quarter that, market share gains could be there. If at all you could, put some number on how do you see industry must have grown or, of course, degrown because even you have seen decline. So what could be, according to you, in H1, the decline in the industry could have been?
Honestly, I can't put a number to it, So I'll just be making a wild guess, which I don't want to do. So really, I can't put a number to it. What could be the decline? And so I'm afraid I can't put a number to it on that piece right now.
Okay. Sir, one last question from my end would be from the distribution front. Just want to know the number of distributors today as on, maybe 6 months back, what it could have been.
So not much has changed on the distribution front. What has changed may be addition of secondary dealers, who buy from distributors. So maybe just few distributors have probably got added on. So there's not much change on the primary distribution front. Secondary dealers probably have increased for the commodity product getting into the market.
Oh, got that, sir. So thanks a lot and all the best. I'll just come back in the queue.
Thank you.
Thank you. We would request the participants to please press star and 1 to ask a question. The next question is from the line of Shrenik Bachawat from JM Financial. Please go ahead.
Hi, sir. Thanks for the opportunity. Sir, I wanted to understand gross margins are contracted by 80 basis points quarter on quarter. So is that the savings in chemical cost has been offset by the commodity laminates? That's the first question. Second question is, has the employee cost come back to pre-COVID levels? Thank you.
So we have restored the all the pay cuts, etc., which we had effective October 2020. So that's one response. On the gross margin contraction versus Q1, so yes, certain costs have gone up a bit. Some chemicals, certain paper costs, etc. So I think there's a minor shift in RM cost. Unless Ashok wants to add something.
Yeah. So from the Q1, the dip which we have seen in the Q1, there is some amount of cost going up in the quarter 2 which we have seen, but not of a major impact which we have seen.
And some realizations also gone down.
Yes.
Some realizations also come down in exports.
And sir, in this commodity laminate segment, what would be the EBITDA margin that would be you target?
Can't put a figure to it right now, yeah, boss. So I'm asking Ashok to take it offline with you, please.
Okay. Thank you.
Thank you. The next question is from the line of Pranav Mehta from Equirus Securities. Please go ahead.
Yeah. Hello, sir. Thank you for taking my question. So just wanted to understand on the raw material front. So are you seeing any cost inflation on the raw material side for next 2 quarters and even for FY22? That is one question. And yes, sir, you can continue. I'll ask the other question.
Yeah. Pranav, even though just like what I mentioned, in the dip what was there in the quarter 1 as compared to quarter 4. So yeah, the cost from there, it has slightly gone up in quarter 2, but still the costs are much lower in comparison to quarter 4, and most of the cost was come down in chemicals. So the cost still is down in comparison to previous year, but on a quarter 1 basis, there is slight increase in the cost. And
okay,
going forward, we are not seeing any huge cost increase or increment as of now.
Okay, sir. And sir, just wanted some clarity on your door and floor businesses. So I see that door is gaining some traction, but the floor is still not able to do it. So can you throw some light on how things are going to move in both these segments going forward?
So on the flooring business, I think we will see an improvement in this quarter. We have business lined up, and certain executions could not take place on the flooring business. Rather, actually, sales have come down a bit. So I think versus Q2 of last year, so we should see improvement in the flooring business in this quarter.
Rather, Pranav, if you see the flooring from Q1 to Q2, there was a
Sorry to
sizable
interrupt.
increase in
Sir,
sales.
you're not audible.
Yeah. Pranav?
Yes, sir, I can hear you.
Yeah. If you see in flooring from Q1 to Q2, there is an increase in the sales. Yeah, obviously the sales of doors was not come down to that extent. Doors was down too much. But as sir has said, we can see the improvement in this quarter and quarter to come.
Sure, sir. Yeah. Thank you very much.
Thank you. We would request the participants to please press star and one to ask a question. The next question is from the line of Rishikesh Bhagat from Kotak Asset Management. Please go ahead.
So just two questions from my side. So firstly, when you made this comment about container availability for export, I believe we import some degree of paper also. So any challenge of availability in import from paper also, or any difficulty in that on that front, paper or pen?
So on the import front, availability is not a problem because the exporting nation is shipping the container availability. So there the challenge does not exist, but the delays of vessel and some congestions, but it's a minor impact. So yes, there is a impact of congestion and clearances, but not of availability.
Okay. Okay. And my second question, I know it was asked, but more or less on the similar line. Now, when you made this comment that 1 mm is gradually picking up, then is it a fair assumption that since now that mix might improve towards slightly relative towards 1 mm, the margins, EBITDA margins can improve, because as Ashok sir said that not much impact on the raw material side. So if I believe that gross margin might get maintained here in around some level, so EBITDA margin can improve with the mix improvement in mix towards 1 mm.
So yes, you're right. If the mix improvement happens on 1 millimeter, EBITDA margin could improve because gross margins in 1 mm are higher and margins are also higher in 1 mm. So yes, you're right on that.
Okay. Thank you.
Thank you. The next question is from the line of Harsh Shah from Dimensional Securities. Please go ahead.
Hello?
Yes, sir, you can go ahead, please.
Yeah, good evening, gentlemen. I just wanted to understand the industry dynamics in terms of imports. I mean, how much does import contribute to the overall laminates and the veneered furniture business? And how has it moved over the last couple of quarters?
So, boss, we'll have to take this independently because we'll have to give you a full, information and.
So if you can just throw a gist for everyone's benefit.
Okay, so just very quickly, I'll take this in laminates. The import of the finished product is very, very minimal, while raw material is largely imported. And what was the next question you had? What was the next?
Yeah, I mean, how has
laminates,
imports moved over last couple of quarters for both laminates and veneered furniture?
So furniture, I cannot talk much. I cannot give you a figure on that. On the veneer piece also, largely the raw material is imported. So in the laminate and veneer business, the imports are largely of raw material. The finished goods imports are limited. While in the flooring and door business, especially in the flooring, besides us, literally everything gets imported into the country. In the door segment, you could say there's a mix between domestic production and imports happening. But as far as the trend and figure, I'm afraid I can't put that, give a figure on that right now to you.
Okay. And also, would you be in a position to, highlight, I mean, how much of your sales are going towards institutions or term wholesale, and how much would be retail, just to understand which market is picking up?
So, again, this is going to be more like a general direction feedback. 60-65% revenues coming from the residential part of the market. If you say domestic, the balance comes in from the commercial market.
Okay, and where are you seeing better growth of the two?
At the moment, if you say the retail/residential market seems to be more buoyant and versus the commercial market. But it's not such a huge swing, which really is going to impact. It could be just few percent movement here and there. Yeah.
Just digging a little deeper. So when you say residential, then is the demand more towards refurbishment or renovation of houses? I mean, individual houses, or is it going more towards the bigger projects of say 3-4 buildings and similar entire projects?
So again, these are all estimates. By and large, the newer construction, newer interiors consume more laminates, right? And the renovation percent in our country generally is low. There could be improvements or additions, but largely it is more newer interiors, newer projects, newer homes, newer construction, which would end up consuming more percent of our products.
Okay, I get it. Thank you so much.
Thank you. The next question is from the line of Mithun Soni from GC Investment. Please go ahead.
Yeah, thanks. A couple of questions. Would you be able to share what is the mix of 1 mm versus 0.7 mm for us in this quarter? What was it last year?
Actually, we cannot share that. And last year we didn't have a 0.7 category domestic, so it was only 1 mm and 0.8.
But the 1 mm would be like, how would it, in terms of the differential in terms of the growth or the degrowth, would be much higher in the 1 mm, right?
Yes, sure, because 0.7 wasn't there, so whatever you see negative growth is in the prime category. Yeah.
Okay. And how is the pricing power in the, like, are you able to get a good reasonable pricing for the 0.7 mm? And similarly, how is the competitive environment you are seeing even for the 1 mm on the pricing front?
So on the pricing front, in the 0.7 commodity product, the ability to get a premium is very limited, right? Because it's a commodity liner product which is used inside of a furniture or back of a table or inside a kitchen or a wardrobe. While in the 1 mm you have pricing power because it's a specified product, it's based on design, texture, it's visible, people can see the product. So 1 mm you have more pricing power, 0.7 you have limited pricing power.
Okay. But we're reading that a couple of other players are putting capacity, like Stylan is putting capacity, some other players. How do you see the risk of the market being over capacitized?
So the laminate industry always has been, always had a lower utilization versus installed capacity. So adding capacity in this business is not the only reason for being successful. So capacity is always mostly surplus with most manufacturers. The sales, marketing, distribution, is more of a challenge in this business. So really from that perspective, if you look at local companies, so many other companies, the utilization levels will be, sub 50%, sometimes sub 40%. So that's not unusual to have high capacity in this industry.
Oh.
And raising capacity is also not a challenge. In 9 to 12 months, you can add more capacity.
Oh, and one last question. The plywood is the lead indicator, the sales of the plywood and all those precursors to tell us, because then the demand for veneer comes. How are you seeing the initial signs in the month of October, September, October, in terms of the demand for all your lead products?
So laminates and veneer can be pasted on plywood, on MDF, on chipboards. And sometimes, depending on the product, like we do many specialty products in laminates, like facade laminates, which is installed on a concrete, bathroom partition products, which is a self-supporting product. So yes, but largely laminates and veneers for the domestic market is pasted and stuck or on a substrate, which is a chipboard, MDF, or plywood. Answering your question on October, like I said earlier, so we did not experience any degrowth in the month of October. October revenues was equal to what we did October, 2019. Right.
Okay.
Okay, perfect. Thank you very much.
Thank you. The next question is from the line of Achal Lohade from JM Financial. Please go ahead.
Yeah, thank you for the opportunity. Sorry, I'm hopping on the gross margin question. So if I look at on a YOY basis, we've had about close to 200 basis points increase in margin. Now, on one hand, we have some benefit of the chemical cost, but we also have a product mix which is kind of little weaker than what it was earlier, given the 0.7 mm contribution. So just wanted to understand a little bit more in terms of the margins. How do we look at gross margins going forward? Is there a substantial difference between the 0.7 mm and 1 mm and between domestic and export?
So I'll take that question broadly. So the gross margin improvement, like Ashok mentioned earlier, is a function of some lower cost. And besides the domestic business, we also have an export business where the per sheet realization has improved due to value mix improvement and certain currency depreciation also. So while there is a commodity, but the shift is not so high that will impact gross margins negatively, or margin negatively. We have just announced that we are into the commodity segment also, but the value mix improvement which we've done in the international market with some currency gains, so that's the reason, and with RM cost reduction has led to this improvement. Ashok, unless you want to add something else.
And going forward, since as I mentioned earlier, that we are not seeing any increase in the raw material cost as of now. So we feel that we should be able to maintain this gross margin.
And this, when you say maintain your gross margins, you are baking in your mix as well in the account, right?
Obviously, yeah. Obviously. Sure.
My second question was, when you said about October revenue flat YY, is it in volume terms or it's revenue you meant? Because given the mix...
You want to ask everything. We're talking quarter two, so... I don't know what to say, what not to say. You can assume right now, values for the moment. You get too complicated, we start reviewing October then.
Okay. My next question was, in terms of the exports, now you said there are issues with respect to container availability part. But, in terms of the visibility momentum in overseas market, how are you looking at? Are you looking at any substantial increase? Let's say theoretically this container availability gets streamlined in next 2 months, let's say 3Q. How do you look at next 6 to 12 months from an exports momentum perspective?
So I think I mentioned that earlier, and probably I'll be repeating this. So on the exports, I think if you take at least 6 months, I'm not talking 12 months, we should be able to, be able to do what we did so-called pre-COVID numbers in both quantities and value. So certain markets are on a good momentum. Certain markets there are still problems. Certain markets still have some partial little bit of shutdown, lockdown. So if you were to combine everything, we think overall we should be able to maintain a pre-COVID kind of a performance by and large. Yeah.
Okay, let me ask in another fashion. I mean, if I look at exports revenue, assuming it's close to 50-50, we are talking about 550-600 crores of exports. Is it possible to give, which are the top 5 countries and what is their contribution in the total exports so that, one can have a more granular understanding about these markets?
So I didn't follow. You want us to give you the market-wise data? Is that what you asked for?
As in, which are the top 4-5 key markets for us and what is their contribution, aggregate basis?
So I'll have Ashok connect with you on that, please. Yeah.
Sure, sir.
Yeah.
And if I may ask, with respect to the South plant, you said you're waiting for the approvals. But
Correct.
let's say, once the approvals are in place, what is the timeline given it's a greenfield plant? What's the timeline we have in mind and the capex for the same and the capacity?
So I thought, this is communicated. So we have announced 175 crores investment, of which about 45 crores has already been done because we've taken a larger piece of land. Once we have the approvals, which is primarily the environmental clearance, once we have that, and then the other approvals are really routine approvals, which we don't see much time being consumed in that. We'll be happy to start building the plant the moment we have all the approvals in place. And we are looking at installing two press lines initially of laminates there, that too of larger sizes. For those particular product lines which we want to install there, presses we want to install there, we are already experiencing near full capacity utilization, in the existing business, in the existing plants for those particular sizes.
Sorry, in terms of the timeline, it can be done in 9 to 12 months, like you said earlier, or it will take a little bit more time?
So if you take all the approvals in place as the date zero, I think you can take 12 to 15 months, some issues here and there, because it's a greenfield, from the date we start building to 12 to 15 months of starting out.
And how much of the total land will be used in the 175 crore investment, or rather 130 crore investment, like that 20-30% of the land, or it is much?
Yeah, no, it'll be a small part of the land. And we said earlier we are evaluating certain new products and new categories also, which is still being studied, and because of COVID, it's all got delayed. So yes, it will be probably within that, or maybe even lower than that.
Thank you. Achal, we would request you to please come back in the question queue for any follow-up questions, as we have several participants waiting for their turn. The next question is from the line of Ritesh Shah from Investec Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. So my first question is to some extent it's a continuation of the prior one. So if one looks at in a per unit metrics, be it for laminates or decorative veneer, there is a reduction on a sequential basis. You did indicate about the value mix and the currency impact.
Sir, your voice is not clear. Can you please start again?
Can you hear me now, sir?
Yes. You're audible, but I don't know, there's not enough clarity. Yes, please speak again.
Yep. Sir, my question was on a per unit basis, we have seen decline in realization for both laminates as well as decorative veneer. In the prior comment, you did indicate about value mix and some currency favorable impact. So possible for you to give some sense on what were the variables which led to sequential decline in realization, or is it the way in which the market demand is playing out and there is down trading of products which is leading to lower realization? And if that is so, are we doing something to counter this trend into forthcoming quarters? That's the first question.
So I'll respond to that. So on the realization reduction in laminates, we have realizations come down by about 3.9%, Q2 on Q2. Q1 on Q2, realizations come down by about 4.7%. So we said this earlier, in the domestic space, the 1M sales is gradually coming back to pre-COVID levels. And once that is achieved, we think realization should come back to nearly what we used to do. But alongside, we've also introduced commodity line, which is a lower price point. So while there could be certain reduction in the realization, but with improved output, improved production, we'll still be able to hold on to the gross margins and overall margins, that could be even better. On the international front, Q1 is not really comparable because it just had about 6 weeks of operation. If you see Q2 versus Q2, realization exports have actually gone up by about 3.5%. So that's on the laminates front, which is a function of improved value mix and some currency depreciation. On the veneer front, Q2 on Q2 realization actually improved by 5%, and versus Q1, it's shrunk by 5%. Again, the base of Q1 was so small that data is not really so meaningful. So answering your question, I think by and large realization are in a similar band, and obviously we haven't achieved normalcy. Still, we haven't achieved normalcy in sales. There are still some problems here and there. So I don't think it's a huge concern of down trading or reduction of realization. I think this will kind of stabilize in the coming quarters. Yeah. And even if there's a small dip, we think margins should still be under control.
That's useful.
Is that make sense?
That's fair, sir. Thank you for that. So my second question is, how is the inventory in the channel? And you did make a remark that we do seem to that the larger companies are actually getting market share. Can you provide some more color over here? Is it like a shift in loyalties from the retailers towards larger guys, or is it the working capital which is a bit tight for unorganized sector, and hence the larger guys on the organized side are benefited?
Your voice is not completely clear, but whatever I gathered, I'll respond. The inventory in the channel, our distributors, is very much under control, and that is completely reflected in the improvement in our credit terms. Our business philosophy always has been to drive secondary sales and focus on the quality of the business. So really, there is no excess inventory in our distributor channel of our products. Yeah.
Sir, I'm asking for the industry, sir. So I think we are on fine footing.
So in industry, typically the local unorganized companies and many other branded companies also end up giving a large open credit to distributors. So normally these guys they have probably more inventory of unorganized companies, and which are obviously on open credit terms. So yes. So
okay, sir, has that thing changed because of COVID, and are we benefiting out of it?
I think that again, what we hear from the market, that a lot of mid-sized smaller companies have had issues of collecting money from the distributors. They've had disputes of inventory returns and collection and sales issues. So I think we have benefited, and we continue to benefit by disruption in their supply chain, disruption in their cash collection cycle, disruption in from their business model.
Great. Sure. Thank you so much for the answers. I'll join back with you.
Thank you. The next question is from the line of Jay Unatkar from Kotak Mahindra Bank. Please go ahead.
Hi, very good evening, everyone. Sort of wanted to understand how the furniture market in India itself is changing a little with the likes of IKEA coming into India and directly selling furniture, effectively changing the way our business can get impacted. Also, the recent entry of Asian Paints into this business and exploring the possibility of having a higher play in the furnishing business, if you could throw some light on this. Also, want to extend this question into thinking if you are in talks with any of these larger players where you could be a supplier of priority for them, given the kind of positioning and brand that the company enjoys for such a long time. The second question, if I may, is on the import substitution opportunity, which you entered into playing way earlier than the competition, which I assume should give you some edge on the doors and the laminate business. Given the kind of consolidation that we are seeing in the builders community from the organized gaining more share, does this business make it a bigger opportunity than it was when you planned this, or is it shrinking into a smaller number of players you can reach out to? Thank you.
So I'll take the first question first. On the IKEA furniture sale, whatever I know and the last update I had, and we were in talks with them at one point, but most of the products they buy or they wish to buy is primarily a particle board based product, which we don't have currently. What I knew last was the furniture pieces they're selling are more miscellaneous sales happening right now rather than hardcore furniture from the Hyderabad store. This is my feedback. On Asian Paints, yes, we are aware that Asian Paints bought this kitchen company, and it's not new. It's been a while. They bought Sleek, and now they're trying to market the kitchens made from Sleek and also marketing kitchen shutters and panels. So yes, we are in touch with them in selecting our designs and decors for their kitchen shutter program and the kitchen shutter business. We do work with certain e-com players like LiveSpace, etc., where we are the mainline partners for supplying laminates for the kitchen shutters. That's on the organized space. On the import substitution and builders, a discussion which you had. So flooring and ready-made doors. I think these two segments have an opportunity with the import substitution potentially happening, and with the builders getting consolidated, and they're giving out ready to move in apartments and spaces. So laminates was not being imported in the country, only raw material was imported, as I said earlier. But yes, in general, with consolidation, companies like us, we think will stand a great opportunity in the future. And we are engaged with many builders, like for example in Bombay, Oberoi Realty is our biggest customer for the ready-made door business. We also work with Kalpataru. So yes, we are engaged with several builders for the door and for the flooring business.
Thanks, sir. I appreciate it. Thank you.
Thank you.
Thank you. The next question is from the line of Rishikesh Bhagat from Kotak Asset Management. Please go ahead.
My question is on the potential capex of 175 crore. Any thoughts on how the funding will be for the same? How much will be debt we will look to raise, and how much will be from internal accrual?
So, Ashok, you respond to that?
Yeah. The overall capex which we have mentioned is 175 crore, out of which 50 crore is already been spent out of internal accrual for the land, and balance 125 crore also will spread over a longer period. So most of this will be met through the internal accrual.
Okay, so entire capex largely will be funded from internal accrual.
So 50 crore has already been spent.
Yeah.
So remaining 125 crore, which also will be spread over a period of once it starts. So it will be still, I think it will be close to around 18 months to 2 years. So which will be funded through the internal.
Okay. And just wanted to check the commentary. You replied to a question to one of the earlier participants about the whole supply chain disruption and difficulty in cash collection. I think last quarter when we had an interaction, I think you said that since there was no clarity in this is how long it will sustain. But if I understand your comments correctly, this has continued even going into Q2 also, in the sense for a large part of Q2 also, the difficulty for the smaller players in terms of supply chain disruption and cash collection difficulty.
Yes, you heard me correctly, yes.
Okay, thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 now. The next question is from the line of Achal Lohade from JM Financial. Please go ahead.
Yeah, thank you for the follow-up opportunity. Actually, just one question, again going back to the margins part, with respect to EBITDA margin, for the quarter for laminates business, we have reported a 16.1%. But I also see that the employee cost was down 14% YY, for the quarter. And employee cost is significant percentage of revenue. So is it fair to say that, this is the margin we could look at somewhere around 16% going forward, or you think this is probably to do with cost savings which will get normalized in next quarters?
So costs will get normalized, but I think with improved business and revenues, I think we could look at maintaining these margins.
Got it. Great. That's really helpful. Thank you so much.
Thank you. That was the last question. I would now like to hand the conference over to Mr. Saurabh Mittal for closing comments.
I would like to thank all of you all for joining the call, and I hope we've been able to respond to your questions and queries satisfactorily. I think some of the queries will be taken up by Ashok offline. And so thank you once again for your time, and appreciate you joining us on the call. Thank you.
Thank you.
Thank you.
Thank you. On behalf of GREENLAM Industries Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.